Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's analysis, we're going to take a closer and more disciplined look at a statement that has been circulating regarding the ability of a country to defend its real effective exchange rate, backed by an estimated 16 trillion worth of assets that could be tapped into over time. While the figure itself immediately captures attention, the real value of this discussion lies in understanding what it actually means in a macroeconomic context, and more importantly, how it connects or does not connect to expectations surrounding the Iraqi dinar. Let's begin by breaking down the key concept mentioned here, the real effective exchange rate, often abbreviated as REER. This is not just a simple currency price against the US dollar or any other single currency. Instead, it is a broader measure that reflects a country's currency value relative to a basket of other currencies, adjusted for inflation differences. In simple terms, it tells us how competitive a country's economy is in global trade. If a country can maintain or defend its REER, it suggests stability in trade competitiveness and macroeconomic balance. Now, the claim suggests that this stability can be defended because of access to massive asset reserves, quoted here as 16 trillion. Before drawing conclusions, it is critical to understand what such a figure typically represents. In most cases, numbers of this magnitude do not refer to liquid cash reserves sitting in a central bank. Instead, they often include a combination of natural resources, state-owned assets, future revenue potential, and possibly untapped economic sectors. For a country like Iraq, which holds one of the world's largest proven oil reserves, the concept of long-term asset backing is not entirely abstract. Oil wealth, if managed effectively, represents a significant economic foundation. However, there is a crucial distinction between having resources in the ground and having immediately usable financial reserves that can influence exchange rate policy in the short term. This brings us to the first important clarification for Iraqi dinar followers. The existence of large national assets does not automatically translate into a sudden or dramatic increase in currency value. Exchange rates are influenced by a combination of factors including monetary policy, inflation control, political stability, foreign investment, trade balances, and overall economic productivity. Assets, especially those that are not liquid, play a supporting role rather than a direct, immediate trigger. In the short term, defending an exchange rate requires accessible foreign currency reserves, consistent central bank policy, and market confidence. The Central Bank of Iraq, for example, primarily relies on its foreign currency reserves and its management of the foreign exchange auction system to maintain stability in the dinar's value against the US dollar. This is a practical, day-to-day mechanism, not something that depends on long-term asset valuations. When we consider the mention of tapping into assets over time, this points more toward a long-term economic strategy rather than an immediate currency event. It suggests a framework where a country gradually leverages its resources to strengthen its fiscal position, diversify its economy, and build sustainable revenue streams. For Iraq, this could include expanding oil production capacity, improving energy infrastructure, developing non-oil sectors, and attracting foreign direct investment. From a long-term perspective, this kind of strategy can indeed support currency stability and potentially gradual appreciation. However, it requires consistent governance, institutional reform, and economic diversification. These are structural developments that unfold over years, not overnight. Another key point to consider is the difference between nominal exchange rate changes and real economic strength. Even if a country has vast assets, its currency value will not reflect that potential unless the economy is actively converting those assets into productive output. In other words, markets respond to actual economic performance, not just theoretical wealth. For Iraqi dinar observers, this means that while large asset figures can be encouraging in terms of long-term national potential, they should not be interpreted as signals of an imminent revaluation or sudden exchange rate shift. Historically, such expectations have often been driven by misunderstandings of how currency systems operate in modern global markets. let's also address the role of confidence. Currency stability is deeply tied to both domestic and international confidence in a country's economic management. If investors, institutions, and trading partners believe that a country can responsibly manage its resources and maintain fiscal discipline, this confidence supports the currency. On the other hand, uncertainty, whether political, economic, or institutional, can weaken it, regardless of underlying asset wealth. In Iraq's case, there have been ongoing efforts to strengthen financial governance, improve transparency, and modernize the banking sector. These are important steps, but they are part of a gradual reform process. The effectiveness of these reforms will ultimately determine how well Iraq can translate its resource wealth into sustained economic strength. It is also worth noting that defending an exchange rate is not always about increasing its value. In many cases, central banks focus on maintaining stability and preventing excessive volatility. A stable currency environment supports trade, investment, and economic planning. Sudden and sharp increases in currency value can actually create challenges, particularly for export competitiveness. So when we hear statements about defending the real effective exchange rate, it is often more about maintaining balance rather than pursuing aggressive appreciation. This is a nuanced but important distinction, especially for those following the Iraqi dinar with expectations of rapid changes. Looking ahead, the long-term implications of leveraging large national assets are significant. If managed effectively, they can provide a foundation for economic diversification, reduce dependence on oil revenues, and support sustainable growth. Over time, this can strengthen the currency in a gradual and stable manner. However, the timeline for such developments is measured in years and decades, not days or weeks. It involves infrastructure development, policy consistency, education, private sector growth, and integration into the global economy. These are complex processes that require sustained effort and coordination. In the short term, Iraqi dinar followers should focus on more immediate indicators such as central bank policies, foreign reserve levels, inflation trends, and fiscal management. These factors provide a more accurate picture of where the currency stands and where it might be headed in the near future. It is also important to remain cautious about interpreting large numerical claims without context. Figures like a 16 trillion can sound impressive, but their relevance depends on how they are defined, measured, and utilized. Without clear details, such numbers should be viewed as broad estimates of potential rather than actionable financial metrics. As a financial news platform, our goal is to provide clarity and context, helping you separate meaningful developments from speculation. The discussion around asset-backed exchange rate defense is an important one, but it must be understood within the broader framework of economic reality. To summarize, the idea that a country can defend its real effective exchange rate using long-term assets highlights the importance of economic fundamentals and resource management. For Iraq, this underscores the potential strength of its natural resources and economic base. However, it does not imply any immediate or guaranteed change in the value of the Iraqi dinar. Instead, it points toward a long-term path where responsible management of resources, combined with structural reforms and economic diversification, can gradually enhance stability and confidence in the currency. As always, staying informed means looking beyond headlines and understanding the underlying mechanisms at work. Currency movements are complex and influenced by a wide range of factors, and responsible analysis requires patience, discipline, and a focus on verified information. Thank you for watching. If you value factual, balanced, and responsible Iraqi dinar updates, make sure to subscribe to the channel and stay connected for future analysis. And as always, this content is for informational purposes only and should not be considered financial advice.